Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. I'm your host here at AlgoBot, and today we're exploring a strategy called correlation cycle phase shift. This is a cycle timing approach that fits a smooth wave to recent price and acts on the turns of that wave, but only when the market is behaving in a genuinely cyclic way. By the end of this video, you'll understand how it measures cycle strength, how it decides to go long or short, and how it manages every trade with an ATR-based stop and a reward-to-risk target. Let's dive in, and remember, this is educational content only. So what exactly is correlation cycle phase shift, and what makes it different from the many other cycle tools out there? Most cycle indicators use recursive filters to extract a wave from price. This strategy takes a more direct, statistical route. Over a fixed window of recent closed bars, it builds two clean reference waves, a cosine and a sine, and it measures how strongly price correlates with each of them. Those two correlations combine into a single vector, and the length of that vector is the cycle strength, a number between 0 and 1. A high reading means a clean single cycle explains price very well. A low reading means price is mostly noise, or it's trending in a straight line where a wave simply doesn't fit. Because those reference waves are mathematically orthogonal over a full period, the strategy can also perform a least squares fit and calculate the slope of the fitted wave at the most recent bar. A positive slope means the wave is rising, price is near a trough and turning up. A negative slope means the wave is falling, price is near a peak and rolling over. The strategy acts on the turn, the moment that slope crosses through 0. This makes it a mean reversion and swing timing approach at heart. It is naturally suited to liquid, range-prone markets. Think major foreign exchange pairs like EURIST or USD/JPY, or metals like gold, on time frames such as 15 minutes up to 1 hour, where swing cycles come and go. It is designed for the patient, analytical trader who prefers waiting for a measurable condition rather than chasing every move. As always, this is an educational breakdown of how the logic works, not a recommendation, and trading always carries the risk of loss. Let's walk through the mechanics step by step, exactly as the expert advisor executes them. First, the EA works only on fully closed bars. Once per new bar, it records the high, low, and close of the bar that just finished, keeping a rolling history. It waits until it has at least one full cycle window of data, plus enough bars for the ATR calculation, before doing anything. Next comes the core measurement. The strategy fits its wave twice, once using the most recent window, and once using the window ending 1 bar earlier. From each fit, it reads two numbers, the slope of the fitted wave and the cycle strength. Comparing the current slope to the previous slope is what lets it detect a turn. A long condition is detected when the previous slope was at or below 0 and the current slope is above 0. That is the fitted wave crossing up through 0, which corresponds to a cycle trough where price is turning up. A short condition is the mirror image, the previous slope at or above 0 and the current slope below 0, the wave crossing down through 0 at a cycle peak. But a crossing alone is not enough. The strength gate must also be satisfied. The cycle strength reading has to be at or above the minimum threshold, which defaults to 0.55. This is the real edge of the strategy. It ensures turns are only taken when a genuine, measurable cycle is present, filtering out the whipsaw that would come from trending or random regimes where a wave has no meaning. Position handling is straightforward and symmetric. If a long signal appears while a long is already open, nothing changes. But if a long signal appears while a short is open, the strategy closes the short and opens the long. A fresh opposing signal always flips the position. Before any new entry, it also checks that the current spread is not wider than the maximum allowed, skipping the trade if conditions are too expensive. Finally, every trade is protected. The strategy measures average true range over its look-back period and sets the stop loss a chosen multiple of ATR away from entry, 2 times ATR by default. The take profit is then placed at a reward-to-risk multiple of that stop distance, 1.5 by default, meaning the target is 1.5 times as far away as the risk. For a long, the stop sits below entry and the target above. For a short, the stop sits above and the target below. The stop and target then manage the trade to completion unless an opposing signal flips it first. Here's the core of the strategy in MQL5, the way it appears in MetaEditor. At the top are the input parameters you can adjust. CyclePeriod, defaulting to 20, sets both the assumed cycle length and the fit window. CycleStrengthMin, at 0.55, is the minimum cycle strength needed to trade a turn. ATR-period and AtrStopMult control the average true range stop, and TpRewardRisk sets the take profit as a reward-to-risk multiple. Max spread points, lots, and magic round out the settings. Below the inputs, the strategy calls compute cycle twice, once for the current bar and once for one bar back, reading the fitted wave slope and strength each time. It then defines two booleans. Cross-up is true when the previous slope was at or below 0 and the current slope is above it, and cross-down is the opposite. The CycleClean flag checks that the strength reading meets the minimum threshold. Look at the buy block. When CycleClean is true and cross-up is true, the wave has turned up at a clean trough. The EA reads the ask price as its entry, sets the stop loss a stop distance below, sets the take profit the reward to risk distance above, and calls trade.buy with those levels. Now the sell block, the mirror image. When CycleClean is true and cross-down is true, the wave has rolled over at a clean peak. The EA reads the bid price, places the stop loss above entry, the take profit below, and calls trade.sell. Both sides share the same logic, just flipped in direction. Let's bring the whole strategy to life on a chart. Across the bottom, you can see a subpanel labeled cycle slope, and this is the heart of correlation cycle phase shift. The strategy fits a single smooth wave to the last 20 closing prices, and that blue fitted cycle line drawn over the candles is exactly that wave. The cycle slope panel simply measures whether the fitted wave is currently rising or falling. When the slope is above the 0 line, in the green area, the cycle is turning upward. When it's below the 0 line, in the red area, the cycle is rolling over. Watch the first few candles on the left. Price is drifting lower, one bar after another, and the fitted cycle line is sliding down toward a low point. In the panel below, the cycle slope is sitting well beneath the 0 line, telling us the wave is still falling. The strategy does nothing here. It is patient, and it is waiting for the wave to actually turn. Now look at the fourth candle. Price has stopped falling and prints a higher close, forming a rounded bottom, a cycle trough. In the panel, the cycle slope climbs up and crosses the 0 line from below. That upward 0 line crossing is the exact long condition. But there's a second gate. The cycle strength reading must be at or above the threshold of 0.55, confirming that a real, clean cycle is present and not just random noise. Both conditions agree, so the strategy signals along, and you can see the buy entry marker appear right at the turn. The stop loss is placed a set multiple of ATR below the entry, just beneath the fresh low, and the take profit is set at 1.5 times that risk distance above the entry. From there, the candles push higher, one rising bar after another, riding the upward half of the cycle. The fitted cycle line curves upward, and the cycle slope stays in positive, green territory. Price climbs steadily until it reaches the take profit target, and the long trade closes for a completed move up. Notice how the entry was taken at the trough and the exit came into strength, which is the whole idea of trading the turn of a measured cycle. Now the second half. As price approaches the top of the wave around the 9th and 10th candles, the upward push runs out of steam. A candle stalls, then closes lower, forming a rounded top, a cycle peak. In the panel below, the cycle slope rolls over and crosses the 0 line from above, dropping into the red area. That downward 0 line crossing is the short condition, and once again the cycle strength reading is above the threshold, so the market is still behaving cyclically. The strategy signals a short, and the sell entry marker appears at the peak. If a long had still been open, this fresh opposing signal would have flipped it. The stop loss now sits a multiple of ATR above the entry, just over the recent high, and the take profit is placed the reward to risk distance below. From the peak, price rolls downhill, one falling bar after another, following the descending half of the cycle. The fitted cycle line curves back down, and the cycle slope holds below 0. Price slides into the short take profit target, and that trade closes for a completed move down. Step back, and you can see the rhythm. Buy the trough when the wave turns up, sell the peak when the wave turns down, and only ever act when the cycle strength confirms a real, tradable cycle. When the market stops being cyclic and simply trends or chops, that strength gate stays shut and the strategy stands aside. That brings us to the end of our breakdown of correlation cycle phase shift. We've seen how it fits a smooth wave to recent price, how it measures cycle strength to confirm a real cycle is present, and how it trades the turns of that wave with an ATR-based stop and a reward to risk take profit, flipping the position whenever a fresh opposing signal appears. Remember, everything in this video is for educational purposes only. It is not financial advice, not a recommendation, and not a solicitation to trade. Every strategy carries the risk of loss, and no approach works in all market conditions. If you found this useful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment telling us which strategy to break down next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.